Sold at 560.
785 the first, 785 the second, be sure, 785 the third, final time, sold. The third and final time at £910,000, sold. Welcome everybody to the latest edition of the Allsop Prop Chat. This is George Walker, Ben Hodge and Will Clough. We're going to talk about the commercial auction outlook from 2021. Very much looking forward to another good year, 2022. Will's going to run you through the agenda.
The end of another busy year in the auction market, and we will run through in this podcast very briefly some high-level stats from the year, looking back on how that sits against 2020. We'll analyse who's been selling and perhaps more importantly, why they've been selling. Ben will run us through some yield analysis. And then finally, we'll conclude looking ahead to what we predict for 2022. And we'll touch on inflation, the lifting of restrictions, both COVID-linked, Brexit-linked, and return of confidence, I think.
Looking back at the year, just to review that, I think we positioned it, what have we learned? It was a very strong year. Our volumes were up 30% on the year before. Clearly, that was a year of a low base, but this is the strongest or highest volume since 2017, which you might remember something called Article 50 being invoked back in the dim and distant time, all about Brexit. We think that's paling. Certainly, London's picking up, and this year will be a year going forward when things do pick up even greater. So 30% year-on-year growth. If you look at the sub £5 million market in which we work, if you look at CoStar numbers, they suggest that's down something like 18%. So our numbers are up 30% against the downward trend of 18, which is pretty strong. So we've got to ask why. And I think some of that is about the process. And auctioneers do always bang on about timing and certainty. But I think this time last year we talked about digitization of our marketing. We are online and is now totally and utterly acceptable. I think people are beginning to realize what they can do even more from the comfort of their desktops. And the immediacy, the closeness that we are to our market is extraordinary. We can launch product in the market and get 500 hits within a day and meaningful conversations within 24 hours. It's really, really important. It's very much here to stay, and we're very much enjoying that.
I think also looking at the numbers, one thing that stands out is the 40% increase in the larger lots. Yeah. Lots over £1 million, I think we're 179. Yeah,
more than half what we sell, Will, is now over £1 million, 310 million. That's a lot.
Is there any particular reason for that?
Well, we're coming on to the sort of who's selling, and the funds and institutions are picking up the process and how effective it could be, perhaps with a bit more marketing, put it out 2 weeks early. And they have some of these legacy assets. They're all still getting rid of the high street assets, and that's built into part of the stats. So you're right.
Maybe it's more confidence in the process across the board, and as ever, it's stock led, isn't it?
It's continuing a trend we've seen for the last few years, where our average lot size has been growing.
Yeah, I think the Lend of 20 auction, December 20, was average was over £1 million, wasn't it? But these bigger auctions is not feasible. But that's been rising, and that's been really encouraging actually, because buyers love it. I talked to buyers yesterday; they love it. They commit. If they're the last man standing with a finger on the click, they're going to buy it, which is great. So very much a turning point last year in retail. We think it established a new base. You'll see Tony Clarkey bought that Coventry shopping centre. He's got the income really almost doubled in that centre now, with lots of lettings there. He was good enough to run us through it. Quite a successful buy in February, very much we thought would be the bottom of the market, and retail seems to have stabilised. And a lot of the commentary that we'll give you today is based on that. It's a more stable market. It's not great in all situations, but more stable, more easy to predict the pricing. So covering that, let's go through to who's selling, because institutions and funds have become quite big sellers. They always have been in the background. £64 million of sales is 15% of what we sold this year. What we do there is we work very much with other teams of private treaty agents within Allsops and also other teams, because sometimes there is a deadline. So give it a bit longer in the market, get everything right when you go out, and you can achieve an unconditional sale quite quickly. Asset managers, Will, is something that's grown this year, isn't it?
And I think that can fall at many different levels. On the large scale, we probably act on behalf of 4 of them. And it's very cyclical. Often they're managing portfolios bought by private equity money with a, say, 5-year plan in place, and sales are strategically placed throughout that period.
Yeah, so they typically have a clear 5-year plan, wouldn't they?
And if you look back to 2020, we had a huge number of pubs for one of these, what we describe asset managers. This year, there is clearly the boots that we sold. 2021, clearly the boots. Yeah. I think there are how many assets in that portfolio?
90, well, there's over 300, but we saw 94 last year.
Exactly. Another one who we could trace back to 2014 that we've been working with. And obviously there's the bank portfolio as well that was sold out. So it fits in different cycles, but it need not necessarily be just at the large scale, because the private investor with one property can be the asset manager, and it's just in the different category, but it's the same concept. You work the asset, you reach an event, I think Hodge will talk about that in a moment, and maximise the value of what you have to move it on.
Yeah, and as always, the largest number of sellers is the private propco, and the private propco is always managing the assets to best effect, and they will have their own lease events in that. So what do we mean by lease events, Ben? Just want to clarify that.
Yeah, so it might be something that's coming out. So you might be preempting what the tenant's going to do, whether that's with a break option coming up, or whether there are versions coming up. If you can re-gear the lease, at that point in time, it might be a sensible point in order to sell it, because that's the longest unexpired term that you're going to see for the asset.
And that's probably, in our view, where the value is maximised.
It's probably where the value is maximised, and other lease events might include rent reviews. So we might have, for example, we see it actually with a lot of convenience stores. There might be an RPI-linked rent review or something like this.
So bang that increase, and then...
Exactly, so you'll have an increased income. There are other reasons why some people are selling at the moment, though, as well. They might need to refinance. And so actually, if they are struggling to get finance, actually a sale makes sense, especially at that point in the cycle. Other reasons also, and we've seen quite a lot of this, is for sellers that have been frustrated. They've seen their properties on the market for quite a while.
Yeah.
They might have been out in the market, and actually they just have not exchanged contracts. There's been a lot of discussions, but not exchanged. So we've seen a fair few of those coming through the auction contract,
the auction deadline,
and it's worked, and people have exchanged.
Auctioneers banging on again.
Sorry, it's auctioneers banging on again. But those are really some of the key reasons why we're seeing people sell at the moment.
And also, I think people wanting to capitalise on the huge demand that we're seeing.
Strong demand. There's a
strong demand.
30% increase in buyers at the end of last year. We haven't just finished the operators were there back there this year. We had 3 operators doing little leasebacks, and then a Bankspan who you work for. And their vacant premises have been put to the market. And consensual sales, well, I mean, that was quite a big category, wasn't it?
Yeah.
50 million.
And I think it's something where you won't always know that a sale's consensual, but in many instances you will do. It's where a lender is perhaps gently putting a hand on the shoulder of the borrower and suggesting that they might want to exit prior to
or not so gently.
The next formal process, which would be formal proceedings.
Yes.
And we had a big portfolio of that, probably started in June, July time, that quite a few of us worked on.
It was 40 mil, wasn't it?
Yeah, and it's easier approach in many instances, and it enables collaboration between the stakeholders.
And as many of you'll know, if you want to find out what the rent payment history is, you want to find out what that track across the backyard is. It's when you're looking at assets, it's quite nice to have cooperation of all parties, and that's so. A consensual sale gives that. Everybody can actually push in the same direction.
And it's probably the forerunner to formal, receivership appointment.
And we haven't had as much receivership action as we thought will.
It's always potentially around the corner when there's uncertainty, and we'll talk about looking forwards, what impacts there might be on forcing that through. But I think that generally speaking, with rates very low, with PR and public profile of many lenders being quite important to them, they don't want to be seen to enforcing.
And the eviction moratorium.
Exactly. So there are lots of things that are obstacles to that, hence why probably we've seen a bit more consensual.
Yeah.
But will the floodgates open? I think we'll touch on that a little bit down the line. And also as mentioned, there's about the pressure of the auction. A borrower sees their property listed in the auction.
Well, you talk about this. I mean, you deal with more receiverships. They see the deadline. Yeah.
And it just spurs them on to refinance in some capacity. So there are several instructions, but there are many instances where the borrower redeems prior to the auction. So actually, everyone's happy there.
Yeah, it's a good outcome.
Exactly.
And the borrower gets to keep it. Okay, more of that later. Ben, do you want to just cover the yield analysis briefly? We promise not to dive into too much detail on yields, but just a high view on that. Yeah.
This year, we've analysed leases, unexpired terms on leases between 3 and 15 years over the last year for retail, that's single let. Now, we've seen a sample of 357 assets, which is over £200 million worth.
It must be one of the biggest samples in the UK.
Well, it must be one of the largest samples in the UK, and it's double the 2020 sample. The in-depth analysis is it's in our review, in our outlook, and also we are able to provide the stats. But high-level view, the average national retail yield at the moment, 3 to 5 year old expired term, is around 8.2%. So it's roughly 8%, give or take. Obviously, there'll be some assets in there that, for whatever reason, will be a much softer yield, and some that are harder. But as an average, 8.2%.
Just above it, and that's come down to 8.5 to just above 8, hasn't it? This last year.
Exactly.
I mean, I've been going through these, and we mentioned in our outlook, actually, if you do get to read that we're going to do a blog on it specifically, because for the data junkies out there is so much to deal with. For the sort of the agent in you look at it, the vagaries, and only half of these yields have come in this year when we thought demand was stronger. Ben, it's quite difficult to analyse, isn't it?
Yeah. Or, again, high level, it looks like there's a bit of a north-south divide, with the exception of northwest. But again, that might well be due to the data if you dig in a bit deeper. But as always, as we have mentioned before, it's always important to have a look at the capital rate per square foot alongside the yields to sense check. Because there may be many reasons why the yields are a bit all over the place in some instances, especially at a point in time where rents have been correcting.
Exactly, and we mentioned it 6 months ago. It's really valid. Rates per foot are hugely important now. Brilliant. Okay, so let's look ahead. It's a year when inflation is on the lips of every commentator, but also the lifting of restrictions. And I think when you look at lifting restrictions, we're going from pandemic to endemic. London is filling up, the car parks are filling up. Hopefully this is the week masks disappear and we just get back to work in the office or party in the office, depending on which way you look at it.
Talking of restrictions, Darren mentioned Brexit.
Well, but it's important.
It's been quiet for a few years.
But it's going to hopefully level out, isn't it? Border restrictions we should find a new order for that. So that's going to help retailers. Should help with inflation, because this inflation is cost push inflation, so everything's just getting more expensive. It's not driven by consumer demand. So the challenge with that is, whilst inflation typically is the friend of the property investor, eroding of debt, the hope is also feeds into rental increases. There is an issue that if you've got massive inflation at consumer level and rising energy costs around the globe are a part of that, disposable income gets knocked and therefore potential growth. But we have got growth 6.8% ahead of last year. So it looks set for an interesting year. The Fed are doing their increase, the first increase probably today. We're going to have a year when rising interest rates predominate, I'm sure. But we are starting from a very low base. They get to 1%, which is a prediction by the end of the year. That's 4 times where it is now. But if you're buying an asset at 8%, the impact of that is not huge. If you're buying an asset at 3%, clearly it is. But our market is generally the high yielder. And I think it'll obviously have an impact on some of these ground rents potentially. But
and
very hard to analyse.
The drying up perhaps of quantitative easing, in addition to the interest rate rise.
Printing of money
is going to have an impact.
Yeah, well, it'll be interesting from that perspective. Whether our markets move as fast as the money markets, we flatter ourselves they will.
But I think linked to interest rate rises is obviously the availability of finance and the cost of finance for buyers.
Yeah.
And perhaps more challenging, not on the way in, but the refinancing side of things, where people have 2, 3, 5 year facilities that are up for refinance. Values of buildings have clearly changed in that 5 year time span. Rents, if it's retail, will have changed.
Yeah.
And therefore the cost and availability of finance, what covenants are at risk of being breached and what impacts might that have?
And that's, as far as we're concerned, that's supply and opportunity for the investor. We've only ever heard that refinance takes a long time. Perhaps this will be the year that refinance becomes more available.
But we've seen renewed confidence in retail because most of the landlords and tenants have had their fisticuffs, but they've come to agreeable solutions. Rents have been rebased, leases re-geared, breaks removed.
And concessions given.
Arrears written off. And therefore, if it looks sensible, we've seen clearly, look how much retail we sold last year.
Yeah,
buyers are confident to buy back in.
Yeah. And then we should be able to put a valuations hat on. We should be able to say the valuations are stabilised. I mean, the coronavirus bill is something that's coming up, which is going to effectively ring fence the arrears for businesses that were forced to close. That bill is not finalised yet. That gives a formal process. I would have thought it was more focused at the REITs than our buyer base, who's typically done deals with tenants. But it does bring an end to that as of March. So thank you very much for listening, and thank you very much for your feedback.
The February catalogue's out at the moment.
Well, the phones are ringing. So if the early response of 2022 is anything to go by, it's going to be another busy year. We've got a February catalogue out there for February the 3rd. So look forward to hearing from you on that subject. But every indication, the decent sales and records of last year should continue well into 2022.
We'd like to see everyone in person.
Oh, wouldn't we?
We're back in the office.
Wouldn't we? Do
Our
come and
doors
see
open.
us. Yeah, do come and see us. Coffee or lunch in the West End is always available. And yes, we are trying to get back and do a live auction of some sort this year. Ben, thanks very much.
Thanks, George.
And Will, thanks for keeping this.
Thanks as ever.
Thank you very much.